Hey everyone, Symbotic reported third quarter fiscal year 2024 financial results that sent the stock price down more than 20%. So I'll highlight the latest quarterly results and identify the reasons why the stock price is falling. Also, I'll answer if this big stock price drop is a buying opportunity, if investors should buy Symbotic stock on the dip. I'll do all that in this short video, so let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so Symbotic posted revenue of $492 million in the quarter, a net loss of $14 million, and an adjusted EBITDA of $15 million. Although what the company reported for the current quarter is not the cause of the stock price decline. The cause of the stock price decline, which I'll get into more in depth a little later, was the forecast. So Symbotic continues to innovate, and during the quarter, they extended their future capabilities of Symbot by incorporating an enhanced sensor array, and we advanced development of our new mini-bot for brake pack. So if you don't already know what Symbotic does, they provide artificial intelligence, automation, robotics for warehouses. And this service is going to be more in need now that consumer behavior is normalizing. So in the last 5 years or so, consumer spending has went through some unprecedented fluctuations. Typically, you have a balance between consumers spending on services and goods, and that balance is relatively stable over long periods of time. But because of the pandemic, we had a huge disruption in this balance, right? Initially, when we were locked down and we had to spend all our time at home, that created a surge in spending online. And that was great news for warehouse companies like Symbotic and companies like Amazon, where people spend online and they get their items delivered to their homes. And it was bad news for physical retailers because people were avoiding stores, avoiding people. Okay, so that was 2020, 2021, and for the most part of 2022. And then there was another unprecedented shift in 2023 when worldwide economies reopened and people just absolutely unleashed this pent-up demand to get out of the house. People did not want to spend online anymore. People did not want to buy things anymore. People wanted to spend on experiences, on services, on getting haircuts, getting their nails done, going to concerts, going to theme parks, etc. And that was bad news for companies like Symbotic, which help businesses develop and automate their warehouses. And so you had that rapid up and down for the company and for the industry it operates in, and now it's normalizing. So you had those shifts, and now it's coming back into the balance where it was before the outbreak. Now it's not there yet. It's still shifted, and it's still a little bit over-indexed towards away from home spending, but it's normalizing back. It's normalizing back, and that's going to be great news for Symbotic in the long run. Also, in the long run, Symbotic will benefit because wages and the cost of wages are rising significantly, and with the rising wages, it makes it more attractive for businesses to automate as much as possible. And so its services really will help as people spend more money online, which is inevitable, right? Worldwide, people will spend more money online because it's just so much more convenient. So much more convenient for consumers to spend money online than it is to go to a physical store. And that's not going to change. Physical stores cannot possibly compete with online retailers because of the convenience it offers. You can go shop at Home Depot, on Amazon, at Office Depot, at etc., at Macy's, and all of which you can visit all of those stores in a matter of 10 minutes or 5 minutes. Versus if you wanted to visit all of those stores in person, you would have to hope that they are in close proximity to each other. Otherwise, you would be driving all over the place, having to find parking, walking to the store. Maybe you have to pay for parking. And so the convenience advantage, it's unbeatable online. And so Long run, Symbotic has significant tailwinds behind it. Still, the company had difficulties in the latest quarter. Their system gross margin fell below expectations due to elongated construction schedules and implementation costs. They note that they're focused on improving planning, speed of implementation, and project management to improve performance. So if you remember my videos about Symbotic in the previous quarter, one of the things management was focusing on is increasing the speed of implementation. Now, Symbotic only has 39 systems in deployment, right? This isn't like a company that's going out and deploying hundreds of thousands of systems every quarter, right? They're doing very, very few, and each one is a big deal for the company. And so if they can get faster in deploying these systems, that means they can serve more customers. They have a backlog of orders. They have customers waiting for Symbotic to go in and implement their systems. But the difficulty is in actual execution, in getting in there, deploying the systems efficiently at a reasonable cost to the company so that they can still generate profitability. And it looks like in this quarter, they face some headwinds in that strategy of increasing speed of deployment. And so that's a big, big letdown for investors, and that's why you saw that big stock price decrease, because investors were getting encouraged that Symbotic was getting faster in these deployment times, which would boost their revenue because they can increase the amount of systems they deploy every quarter. But now with this news, that kind of brings back those expectations, because now they need to retrench, learn from what happened this quarter that slowed them down, and then try and regain momentum. So during the quarter, system deployments re-accelerated from the previous quarter. They started 5 system deployments and completed 3 operational systems. So looking ahead, they say that improving their deployment process may temporarily slow their revenue growth. However, they expect their system cost to decline and gross margin to return to historical levels during their fourth quarter, which is their next quarter. So they're kind of retrenching, taking a look at their process, improving their process, and that might slow down their development, their deployment speed, but that's going to set themselves up for more profitable and more effective deployment. And the company says starting in the fourth quarter, their gross profit margin will return to historical levels. So a kind of retrenchment quarter for Symbotic, and that's spooking investors. They now forecast revenue for the fourth quarter of $465 million at the midpoint, and that would be down from the previous quarter where they delivered $492 million at the midpoint. However, adjusted EBITDA is expected to double to $30 million. So adjusted EBITDA was $15 million in the previous quarter. They expect that to double to $30 million. And that's along the lines with management commentary that their revenue growth is going to slow down, but their profitability is going to improve in the next quarter as they focus more on their deployment activities. The company also improved its operating loss. In the same quarter to last year, the company lost $42 million in operating income, negative $42 million. But in the same quarter this year, they were negative $25 million. So this is what I like to see from companies that are losing money on the bottom line. I'd like to see improvement. I like to see demonstration of progress. And I have been seeing that with Symbotic consistently. So Symbotic has a strong balance sheet. It has hundreds of millions of cash, and it's generating cash flow from operations consistently for several quarters in a row. And in the latest quarter, they generated $50.38 million in cash flow from operations. That was down from $54.883 million in cash flow from operations in the same quarter the last year, primarily because of fluctuations in deferred revenue. Last year in the same quarter, they had $85.9 million in deferred revenue that came in. That's cash that comes in before the company serves that customer. This year, deferred revenue was negative $60.6 million, and that means the company was delivering on orders that were placed last year, but new orders didn't come in as quickly as they did last year. So that is also a bit of a concern for Symbotic stock investors. So as I highlighted, the stock price was down 25% on the day after the company reported financial results, and that was to be understood because of the difficulties the company approached in the quarter. Now, Symbotic stock is trading at a forward price to earnings of 49. The dip in the price has brought down the valuation. Coming into this quarterly release, I had Symbotic stock rated as a borderline buy, and I last updated that recommendation on June 13th. And what I mean by borderline buy for a company like Symbotic, which is a high risk investment with a high reward potential, when I say borderline buy, that means it should be reserved for those investors that are very risk seeking, that have a high risk appetite and high ability to take risk. If you're more of a risk averse investor, then Symbotic stock is not for you right now, is not likely for you right now. This is likely for investors that are looking for high returns and are willing to take high risks in order to achieve those returns. And in terms of the recommendation of Symbotic stock, I noticed the difficulties the company faced in the quarter, and so I would like to see the company's price lower if I'm getting those lower performance expectations. And we are getting the price at a lower valuation. You're getting it at about a 25% lower valuation. So you're getting a company facing more difficulties, but you're also getting that same company at a 25% discount. So all in all, I think the forces offset each other, and I would reiterate my recommendation as a borderline buy for Symbotic stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.